So UK GDP growth data came in actually really, really strong when everyone was expecting it to be a little bad. And then German retail sales came in really weak. What reaction is this going to have on the euro? And then today's trade and takeout is going to be why you really, really need to note these macro divergences in data and then attribute them to the chart. Now, the only way you can get the best trading insights, education, and analysis each day is if you're here every day. So hit subscribe so you can get your daily trading edge. Yep, so as you can see in front of you, UK GDP growth came in slightly stronger for the quarter at 0.6% versus the expected 0.4% on the year-on-year basis. So the comparative growth between Q2 of 2022 and Q2 of 2023 is 0.6% higher versus the expected of 0.4%. That's fantastic for the UK, considering how downtrodden, I guess, the media constantly is about the UK and the UK's growth. Now, it's not to say that there's not problems, of course. There are problems unique to every single country. But when we compare them to the likes of, Germany, who's actually in a recession currently, it doesn't paint the specific picture that people would have you think it should paint, if that makes sense. And, the pound has reacted strongly off the back of it. I'm just going to show you sterling here. And we had a shift higher in sterling off of the print. So we printed just here, and then we're up now only about 20 ticks. So it's not huge, but you can see the initial drive higher. Now, there's probably some caveat to that. And the caveat is that we're at the end of month and the dollar has been very, very strongly bid up through the month of September. And now we're probably seeing a bit of rebalancing into the month end. And my view really is that the dollar strength will continue next week. So any upside targets on sterling would probably be 1.233, and then we see a little move lower through to next week. But I don't think we'll reach up here today. There's nothing necessarily providing any impetus to that move. Perhaps we'll see something coming out of the US later with PCE, because it's their PCE data, which is what the Fed looks at very, very strongly. It's inflation related, but personal consumption expenditure is what it's called. And they actually look at that more than the CPI number. So many people focus on the CPI, but PCE is more relevant to the consumer. So we could see some movement there. If it's softer, we could see that the dollar falls off a little bit, and that should push the pound up compared to if we're looking at the data divergence there. But I think we're still very much a muddled bag with risk. So start of October, I would argue that maybe some seasonality kicks in and we do start to see the dollar get bid again and risk come off a tiny bit. But on the pound front, it's looking strong intraday, and I would have no worries maintaining a bullish bias on the pound today. Now, right at the same time as the UK growth data, we had German import prices and German retail sales, and you can see that it's been absolutely torrid for them. The actual was negative, 0.4%. So that was the increase, and the expected was 0.5%. Now, this is actually quite important in context that it missed. Generally, you'd want prices to be lower, but in this case, I'd say they wanted it to be higher. And the reason for that is because it's going to keep the ECB in a bit of a tricky situation if prices do start to decline too quickly now, because one of the issues that we might find is that they're going to have to revert on their monetary policy quite quickly and lose some credibility. And that retail sales number is probably compounding that fact, showing a really, really weak German consumer currently. Negative, let's take the year-on-year data, negative 2.3% versus expected negative 0.7%. That's really, really quite bad. That's over double as bad, basically, as the expected number. So German consumer is very weak, and we're seeing a relatively minor reaction in the euro, but it just adds to a bit of a broader view. The euro has actually got a little bit bid off of that. But I think it's probably more off of this dollar weakness that we're seeing into month end. You could probably put the same case forward for the pound, to be honest. But you can also see that there's, some influence from the UK GDP data that would feed through to rates, ticking rates higher, maybe keeping higher for longer for the UK. But with Germany, I think really, really tough situation. And of course, the euro isn't just Germany. You might be able to see a better view of the German situation, or the German reaction in yields. And yeah, the front end of the yield curve has just been bid up after that data. So, the front end of the bond curve has been bid up, yields down after that data. So it's not looking great for Germany. Let's just put it that way. There seems to be some risk-off buying in the front end, meaning that they think the interest rates in the shorter term are going to, fall. Basically, that's what this reaction is showing you. If the longer end falls off, if the longer end sells off, that means that they think that interest rates over the mid to longer term are going to remain higher. I would start expecting that curve to revert quite a lot. But this is a reaction this morning. You're seeing that things aren't great for Germany off that retail sales data. And it makes sense. Industrial production in Germany is completely battered. And I don't see it coming back anytime soon. So watch for the euro, watch for some euro downside going into next week. Right now it's dollar flows, dollar selling off to rebalance a little bit. Next week I would expect that to revert again. One of the things that I always do is advise people to make a note of where key inflection points in the market are, where data diverges and where moves then originate from those divergences. You want to think of a chart and make a note, sort of like a bookmark. When you're reading pages in a book and you want to put it down, you put a bookmark in there to ensure that you know exactly where you're coming back to. And it's exactly the same when you're noting down on your chart. You need to say, okay, this is where I've noticed XYZ data diverge from this data. This is where I've noticed this context change a little bit. So that you can create almost like a story on your chart, and so you can keep updating your view visually. Because it makes no sense just to have it noted down in your head all the time. You can have a view, but make sure it's in words. Because without actually writing it down, you're not solidifying that view. Without putting it down like a story on your chart, you're not able to refer back nice and quickly and react when you need to. So always think of a chart almost like a bookmark of your view.